Hey, Job here. On this channel, I invest 100% of my income and live out of my Robinhood brokerage account. All that in service of the aggressive goal of retiring by 40 years old for my games career. Today, you get to see that in practice and see in what and how I invest my full 2.4K weekly paycheck and how I pay bills on margin. I don't do the typical paying bills first and investing 30% of my paycheck. By using margin to pay all my bills, that enables me to invest 100% of my income and never interrupt the money compounding in my brokerage account. Step by step, you'll see how I invest to build monthly cash flow that'll eventually exceed my monthly expenses and replace my full salary. That said, as always, you'll get radical transparency on my channel. I share my real numbers and you see exactly how much skin I have in the game for any given position. You can follow along my portfolio by checking the free Snowball portfolio link in the description below. If you appreciate all this transparency, make sure to give a like and subscribe. As usual, just a quick disclaimer, this video is for entertainment and education purposes only. I'm not a financial advisor and nothing here should be taken as financial, investment, or tax advice. I'm simply sharing my personal investing journey and documenting my own results. Make sure you have a good read of this disclaimer. As far as a weekly flowchart, I won't go over this. If you want a detailed breakdown of this, check out this video at the top right. We're basically going to be going over this flowchart in real time through this video, so you just get to see this in practice. So let's just dive in. So if we pop over to Robinhood, we can see that it's a little bit of a red day today. And actually in RH Banking, my paycheck actually came in a day earlier. So somehow it's coming in earlier and earlier with the new RH Banking switch. So actually recording this a day earlier than typical, and I'm kind of moving my my workouts and stuff around this week. But yeah, nice little red day today to invest in, which is nice. I'm always more excited to invest on red days, as I've mentioned in the past. So let's transfer it over to the paycheck. So actually what I'm going to be doing now is I'll actually bring this up on screen, because what I'm going to do is just screen record the RH banking transfer. For this one, luckily, Robinhood doesn't block recording this, so I'll just do that. So I'll send it to my individual, select here. So this is my full paycheck, right? That deposited this morning. So 2,427 and 87 cents. And let's get that transferred over. Great. So you can kind of see in real time how this looks like. And then we should see this update as well in a second here. And there you go. So you see the buying power updated here. So basically the buying power updated by double the paycheck amount, right? And then that actually pays down the margin. I've had a lot of questions about this. So the margin basically automatically gets paid down, but then because I'm investing it right away, it kind of goes back up to its old value before the paycheck came in, right? And then also the net value goes up. But once I invest it, that'll actually stay the same. The only time it'll go down is if I withdraw to pay a bill on margin, right? But that's after I've invested the assets. So let's just get started. So let's just pop over the calculator here. So 2427.87. So first things first, we're going to do 10% in growth as usual. So if we check on my sheet here, like what's red, so definitely a lot of red today, right? If we check on Snowball, actually, like checking the find a dip here to see what's red. So one that pops out is definitely DRAM. DRAM's down a lot today. Looks like IALT's down a little bit. And then if we check against the sheet, yeah, so IALT's down a little bit. DRAM still in the green, but down a lot today. So I'm thinking I'm going to do DRAM today. It's been a couple weeks since I've invested into it as it was kind of going higher. But honestly, I think we're kind of seeing it for ourselves, the effect of the memory shortage. We're seeing it with Apple and Microsoft and Sony all increasing their console and hardware prices, right? We saw with like the Steam machine for people that are in games, how that's come in way higher than expected, all because of the memory and storage shortage. So I think that's going to last probably for the next couple of years still. So I'll just keep investing a little bit into DRAM. It's definitely still a small satellite position, right? It's barely a percent here, 0.24% allocation here. So yeah, just a little bit of an asymmetric play, a little bit more concentrated really. So let's just do that. We'll invest 242 into DRAM. So let's do that. Great. So just buy a little bit of that dip today. And also there has been like a bunch of stuff around it. Like there's that potential lawsuit where people were worried about like price fixing. So we'll see how that plays out. So I'll keep an eye on that. But I think overall, like I think the shortage is still very real. I don't think that's gonna affect things too much in the grand scheme of things. Maybe a dip here and there from it, but I'll be monitoring that closely. And then now for the high yield stuff. So the 90% of the paycheck. So the bulk of it, right? So if we do minus 242, we have this much left. So another buy that we need to do, given that we're at the beginning of the month, is $200 into KGLD. So typically what I do, right, is I do $200 in KGLD every month. And this is kind of as part of the hedge bucket, right? So this category over here. So previously, when I first got started with this strategy, I was testing out put insurance. So I was doing about $200 a month to buy put insurance. But like I've mentioned, and I probably need to do a separate video on this, but I didn't like the feeling of kind of like quote unquote throwing money away every month, especially on green months, right? And a lot of the times, at least in the US market, like it's more often green than red. And I didn't like the timing of like having to sell when it is red, right? So I'd rather just kind of invest in assets, and gold is part of that. So just something that's uncorrelated to the market. It definitely has its swings. It's a lot more volatile than it used to be, but I want to do gold and also just kind of long short ETFs, just to kind of help overall reduce the volatility of this kind of 10% of the portfolio, right? So we'll just do another $200 into KGLD. Yeah, normally I would have bought put insurance with this, but instead I'll be doing it in this. And has a nice little green day today, actually. But as we can kind of see, it's been going down, right? And I've still been buying overall for KGLD. You can kind of see I've been buying in this channel here as it's dipped. So we'll just keep buying there. So another $200 in that. Let's do that. Great. And then, so minus 200. And then now we have this much left for the high yield category. And I'm thinking I'm going to split this in two. So if we split this, let's do that. So I'm thinking if we go back to the dip calculator here. So we see that BLOX is quite a bit in the red. So this is one I definitely want to buy. It's just got affected a lot more between its kind of semi-exposure and crypto, right? So BLOX has just kind of exposure to crypto companies and crypto itself, and then also crypto-related companies such as NVIDIA, Robinhood, and things like that. I definitely want to buy the dip there for BLOX. So that'll be the first half. And then given that we just bought some gold, I would have bought KCOP normally, but I think I'll buy some GIAX. So that's kind of gone down a bunch over the last 10 days. Overall, I think I'm just slightly in the green there, but yeah, I just want to buy that dip. Overall, I've been kind of impressed with GIAX, honestly. If people weren't aware, it did have like a strategy change at the beginning of this year, where originally it was just kind of holding the indexes and the international indexes. And then that was kind of struggling, right? I kind of see how it was going down. But then since it changed its strategy at the beginning of the year, so you can kind of see how it's recovered really nicely from the Iran dip, right? More than some others, 20% up, which is impressive. I like the diversity that it gets through its kind of exposure to small caps, mid caps, and S&P and international. But then it gets its income through investing in single stocks. I think MU's in there, a bunch of others. But yeah, I've been very impressed with this so far, with how it's done. So I want to keep investing into this and build up that weekly income from it. So let's do that. So let's do 992.93 and BLOX. So every penny, do that. Great. And then do BLOX, right? So that'd be 992.94 every penny. Cool. And then buy the dip in BLOX today. Great. So with that, that's the full paycheck invested, right? So we'll see that the buying power went down by exactly the amount that I invested. And then the margin used has ticked back up to what it was before I put in the paycheck. And that's the full paycheck invested. So you can kind of really see paycheck comes in, I get that transferred over to my brokerage, and I invest all of it right away, right? So what that does is that pushes up my gross asset balance, and we'll update that in a little bit here. But if we go to my spreadsheet here, we're going to go to paying bills next. And there's only one bill coming up for next week, and we'll just get that transferred over right away. So I have my Fidelity credit card here. So this is my 2% cash back credit card. And at this point, so my main cards right now are the Summit, which is my travel card with Alaska, and then also my Robinhood Gold card for 3% cash back. But occasionally I do have to use my Fidelity for just Venmo transfers. So I get a little bit of a losing trade here where I don't like keeping cash at all, right? So anytime I need to pay someone on Venmo, I actually just use my credit card. And the Fidelity card is nice because it doesn't actually charge you a cash advance fee. It doesn't treat a Venmo transaction as a cash advance fee when I send money to someone through there. So it just charges me 3%, but then I get 2% cash back. So really it costs me 1% to do that. So not too bad in the grand scheme of things. I think it's better than if I pull it on margin, and that costs me 4.5%, right? So yeah, so I just do that. So this is practically the only thing I use Fidelity for now. So that's why this is a lot smaller compared to the other credit cards. So we'll just get this transferred over. So 381.10. So this I'll just get transferred over again off screen here, just because from the Robinhood brokerage, it doesn't actually let you screen share, unfortunately. Can't wait till we get a desktop app for that. So I'll just get that transferred over 381.10, and then you should see that update on screen here. So just pay attention to the buying power here, and then this number that will go down. Get that transferred over to savings. Cool. That's transferring over. Great. So it should take, yeah. There you go. See that updated. So that's transferred over. So that's my bill paid. We can kind of log this here. Great. And then after the video, I'll just actually make sure it draws by that certain date. But yeah, that's the bill paid. So really, this is the full process, right? You can you really see that I did this whole thing, right? I invest 10% into growth, 90% into high yield, and then I'm leveraging margin to pay all my bills, right? And really just kind of doing that big arbitrage of like my 30% blended yield versus a 4.5% interest from margin. So with that, let's just get my spreadsheet updated with all those numbers, right? So we can kind of see how everything was affected. So let's just get that updated. So get my margin total. So you'll see that the margin total will go up here. So basically net value of my paycheck minus that little bill that I paid. So this has gone up like by the 2000-ish, right? And then margin here has crossed the threshold to 190 with the bill, right? So basically this has gone up by like the 310. And that's that. And then let's just update the individual positions here. So GIAX. And like I mentioned, right, I like updating these manually as well as kind of tracking on Snowball, just because it's nice to see what gets averaged up or down as I update these, right? It's kind of just part of my ritual at this point. Like I get so excited investing every week in the portfolio. And even before I was doing my full paycheck, right? Like I just love updating my sheet. And so let's get that. So BLOX, some nice average down there with BLOX, given how much it's gone down right there. And then DRAM, this will be a little average up, given that it was like 15% in the green. And number of shares here. Cool. And then KGLD will be a nice little average down as well. And number of shares. Cool. So with that, we can kind of see that my gross value of the portfolio grew to 421.5K. Margin used is sitting at 192.90.2K, and net value sitting at 231.3K. So the key thing is, right, the gross balance just keeps growing, right? This is what's not ever getting touched. This is only growing every month, basically, just because I'm investing my full paycheck, growing this balance. And really what only changes week to week as I pay bills is really the net value, right? Because margin gets added, that gets minused out to the gross value, but I'm never selling any assets to take money out, right? That's the key part here in this whole process. Gross balance just keeps growing. Compounding is never interrupted. And that's the idea. You just want to let compounding do its thing, right? There's a reason they call this like one of the miracles of the world, right? Compounding. So I just want to let compounding do its thing, never touch it. So it's compounding both on the growth side and then also on the high yield side, and then also just kind of building up my monthly cash flow every month. Right? Speaking of which, we can actually calculate how much cash flow we built up today. So if I bring up, 3 calculators, let's go. So let's see, how much did I do? So I did $200 in KGLD. So we can actually look at KGLD's current yield here. So that's sitting at 18.62. So I added $37 a year to KGLD, divide that by 12 to get the monthly. So I added $3 a month to that for KGLD, and then did 992.94 for BLOX. So that is 0.39 right now. Current yield. So added $396 in annual income. So divide that by 12. So $33. And then GIAX did 992.93 times 24.24, 73. So added $245 a year. Divide that by 12. So if we add all of that up, added $56.63 of monthly income through the investing today. So pretty awesome. 56.63 times 12. So added $679 in annual income this year through my investing today. So pretty awesome. And if we check on the margin health after all that, so again, all the same numbers, the equity sitting at 54.87%, which is nice, sitting at a 1.82 leverage multiples, and my margin buffer sitting on the growth portfolio, just sitting just under 30% here. And with that, my buying power is sitting at 84.2K. So this is like money I could invest if I wanted. And cash available for withdrawal sitting at 42.1K. So 125.9K away from a margin call here at 105.3K. And yeah, we'll always dive deeper into this, into the weekly portfolio updates, but that's kind of at a glance there. And then monthly income with all that is sitting at $5,570 a month, sitting at 66.8K a year, 1.2K weekly, and $183 daily. So roughly that's giving me a 30.61 distribution yield. So this is if you just factor it in on just the high yield income assets, right? If we go off the full portfolio value, my blended yield is sitting more at like 16.41%. And of course, like I mentioned, like none of this is free, right? Like I'm paying 4.5 interest on this big margin balance. So $709 a month, but I'm making 5.5K, right? So that's a 4.8K positive margin spread or 26% spread. So pretty amazing when you consider that, right? So my margin interest is well covered. If I would stop investing, for example, it would kind of self-sustain itself. And yeah, and then with that, my growth sitting at 203K at 48% and high yield sitting at 218.6K at 51%. So that's what makes up the 421. And that's the full paycheck investing process, right? And yeah, right after this video, typically what I do is that I'll update these trade alerts on the Discord. So yeah, even this morning I had a few buys here with like Goop from my Snowball referral earnings, some lawsuit payments from Facebook, and also just 50% reinvestment of my weekly dividends this week. So everyone gets a heads up on the Discord, early heads up on all that. So definitely consider joining. Nice little community that we have here. Lots of back and forth daily, and yeah, lots of other people living out of their brokerage in lots of different ways. So you can kind of learn from not just me, but from a bunch of others too. So great way to expose yourself to all that. So definitely consider joining for $3 a month if you're interested. And then also, best way to support the channel is check out the description below, and you'll see all my links there for anything that's free and paid. If you appreciate all this transparency, definitely give a like and subscribe. Hit the bell notification if you want to be notified by future videos. And I'll catch you in the next video. So we'll catch you then. Peace.